Hey everybody, I'm with Kate Finance, and she gets really into technical analysis, which is different than me. So it's good to kind of go to different channels and like understand it from other sides because there's always benefits to learning more. And she has more deeper understanding, but it seems like that's her niche. Um, but you could just introduce yourself if you want and tell us about yourself and your channel.
Yeah, so hey everyone, my name is Kate. I started my channel about 9 months ago where I do predominantly technical analysis, but like I always say, you should never just trade off of technical analysis. So I do, depending on what type of video I'm doing, I'll also break down the fundamentals where we'll go through some of the financial ratios to say, are they in a good financial position? And then I do think there's value in understanding, where the stock is currently trading in terms of, is it overbought? Is it oversold? Is it in uptrend? Is it in downtrend? So that can just add more tools to your toolbox to make good financial decisions. But it's kind of like a game to me, understanding the chart, understanding candlestick patterns and various different indicators to make good trades. So that's what I like to do. I like to bring in good companies that people are interested in and break down the chart to read somewhat of a sentiment from the chart as well. So that's the gist of what I like to do on my channel.
You make a lot of videos, right? I think you do like every day or
I try, but a few times a week for sure.
Yeah, a few times a week. That's really the key to being successful on YouTube. Just pumping out videos. Of course, you want the content to be at least good, but I think the most important part by far is getting as many videos out there, and not worrying about being perfect.
I agree.
You're from New York,
No, I'm from the DC area.
Oh, DC. That's why you're from New York. You said you have like a background in finance. You worked for like a bank or?
Yeah. So my undergrad in college, I majored in finance, and then I went back to get my MBA, and now I work at a consulting firm. So consulting.
Okay. What do you do exactly? Or you don't have to answer anything if you don't want to, but
yeah, I just honestly, consulting is such a vague term, rightfully so, because it's whatever the client needs. Right now, I'm doing asset valuations for the client, so that also sounds vague, but
no, that's interesting. Asset value. You look at their company or their
yeah. So that was probably also misleading, but I did that previously at my other company actually. But right now, we're doing asset valuations for the client in terms of what they have on their books, given the nature of the assets on their books. So say currencies or like vehicles, the valuations of these are going to change pretty dramatically. So it's important for financial reporting standards that these are up to date. Because if you have Bitcoin, 5 years ago that you seized and, you're valuing it at the price 5 years ago, you're going to have a massive understatement on your books of what you currently own. So just periodically going back and looking at that and understanding, the nature of the asset and trying to get to a fair valuation for financial reporting.
Did you ever see my videos? I don't know if you do it. I do a discounted cash flow. That's pretty much what I do every video.
Mm-hmm. Yeah, so I think, and it's funny, I always talk about DCFs for, price targets. Everyone wants to know like what your price target is. And I think the best way to get a price target on anything is a DCF, which is built upon assumptions. But at the end of the day, you can only use, all the tools available to get to, a best fit. So we don't do that. It's a little bit different. But for stock, DCFs are, pretty important when you are arriving at a price target for a stock.
Right. And like I try to there's no way I can convey it in a video, but there's nobody can predict the future. And people get sometimes go, wow, this video aged poorly. Like you can't you can't predict stock, especially with a commodity like with a company like Amazon or Facebook. Although that's still not easy, it's a million times easier than like predicting where where the price of gold is going to go, or oil, because that's really, if you're invested in a gold mining company and the price of gold triples, their stock's going to go up a ton.
Yep.
So if you're able to predict the price of an underlying commodity, you're super rich.
Yep. Well, it's interesting
yeah,
because I think for price targets, we've seen so often where companies will report earnings and they absolutely crush their earnings, and everyone's like, "Why is the stock tanking?" And it's because they'll adjust their revenue guidance moving forward, and people don't understand that the future revenue guidance is built into these models where you get your price target. So if they're downgrading how much revenue they think that they're going to get, that's going to affect price targets, as it's all built into the DCF. So that's why it's important to understand kind of what those inputs are.
So you hear that, everybody? So generally what I see is if a company meets earnings, the stock price goes down a little bit. If they crush earnings, if they beat earnings, their stock price goes down a little. If they miss earnings, their stock price goes down a lot. That happens a lot. If you ever notice, like even if they beat it, it goes down. Of course, if they fall below earnings, it goes down a lot. So it seems to go down a lot of times. And why is that? I think the two main reasons, Kate just mentioned one, is if Netflix, even if they beat earnings, and then they said 2022, which I think they said, we're going to have 30% less new subscribers in 2022 than 2021. So that's why the stock price goes down, because the future of the company, at least according to Netflix, isn't going to be as strong as last year, as what people thought. But another reason it goes down is because people don't wait for earnings. Like, if a company crushes earnings, it's not like, especially a big bank who really moves stock prices. They don't wait for earnings to identify whether they're going to buy or sell the stock. They buy it well before earnings, hoping they beat earnings. And when they do beat it, the stock price sometimes doesn't budge much, because they already bought into it and push the stock price so much higher. So that's why you can't really wait, because people always say, oh, I'm going to wait to find out, see if they hit these targets and if they do that or not. But it's way too late at that point. So you have to kind of like look into your crystal ball and see the future. Would you say that's accurate? Like, it gets built in to the price a lot of times.
Yeah, I think that's another really important distinction, because there'll be a ton of companies that will have just news coming up. It doesn't even have to be earnings, but when people will be commenting, be like, "Is this a buy? Like, should I buy before this decision?" And it's like that very often is priced into the stock, and that's the idea with finance and with stock prices is that a professor explained it really, really well as like a piranha, where you drop something in the water and the piranhas just eat it up immediately. That is just how the stock price is any sort of news that's public information gets released into the market. It is immediately eaten up and interpreted, and it's reflected in the stock price. That's theoretically how it should be done. So often, going to your point, is that this is often built in to the underlying price already.
Exactly. What's that term in economics? Perfectly. When everything is perfectly priced into a stock, efficient market hypothesis, is that it?
Yeah, EMH.
Efficient market. So exactly. That's why someone said, when I say, I said in a video once, this company's paying a 3% dividend, so mathematically their stock price will go down by the dividend payment.
Mm-hmm.
And he said, you know what you're talking about? The stock price moves based off of supply and demand, which it does, but I don't. People don't think of companies like, if you extract 3% of the cash out of a company and give it to somebody else, that makes your company worth 3% less.
Yep.
But okay, so let's do the first raffle. Say I'm in if I don't get you. So what we do this raffle. You get a $20 Amazon gift card, and a randomizer changes this number each time. It didn't start yet. Richard, I think, say I'm in if you because I see 22 people here and 18. Okay, I'll just do the randomizer. So if you want to talk while I'm doing this, or Dutch Master.
Someone said, "I hope she can see these." I can see. I can see your comments, guys.
I'm actually not feeling that great. So I'm trying to play it off. I don't know if.
No.
But I don't want to go into it. But it's no big deal.
Okay. So if you're a guest here, let me know in the comments. I'm always curious. What was the first stock you ever invested in? I'll never forget mine.
So the way it works is, Tomas, when I go into this box and change it, this randomizer will change. But that didn't count, because as I'm filling in people's names, the randomizer changes every time something happens. Tesla. My first was Nordstrom's.
Nice.
I actually bought it. I was interning at an investment bank, and there was no. Well, there was internet, but there was no online brokerage companies. It was pretty early. I was 95, I think. So there was an inter-office envelope. I don't know if you guys know. It's just a big envelope, and you write someone's name on it. So I had to write down the trade ticket for Nordstrom, inter-office it to the trading desk, because I worked at Credit Suisse First Boston.
Cool.
Which was a pretty big company, and they still are. And that's how I bought my first stock.
Wow. The times are different now, that's for sure.
and there was all fractions. It was all, which I actually like, because I was a math guy. Like, it was like 11 and 1/8, or like it was all in eighths. You can buy something at 3/8, like 16 and 3/8, or okay, let's do another randomizer. Richard, he got picked. He's the only one who got picked. Richard, email me this email address. And then I'll send you a $20 Amazon gift card. So yeah, Nordstrom, that was good. That went up. That one, I forgot. I know it went up, but it was so hard to track the market. You had to like.
Yeah, you had to like go to like Times Square to see the tickers on like the side of a building or something.
Even my first job out of college. Well, that was 99. But we had to call like a phone number, and then type in a ticker, and then it would say what it's trading at.
Wow.
I did a lot of cannabis. Okay, I see where you're going with that. Okay. No, it's not. I got it. I don't know, shingles 2 days ago.
Oh,
it's God. Like it's really, really painful. So I'm on this medication. But I was in bed like the past 2 days.
Oof.
But it's fine because I gotta like it's not, you don't feel sick at all. It's just like you just got to deal with the pain. And if you could deal with the pain, you could do really whatever you want.
Yeah.
It's just being able to sit through the pain. But anyways, I don't want to talk about that. It's in case I'm acting weird. That's probably why. But so Facebook tanked, and that's my big investment. You don't like Facebook?
I'm concerned more about
Thanks, Justin.
the ad revenue with Apple, but I personally am so into Web3 crypto that I think they can be a major player in this. So I'll be interested to see where they go. But that was a pretty big haircut that they did take a few days ago.
But they did beat revenue. They fell short of earnings.
Mm-hmm.
And I know there's always like, speculation on like this company's doomed or this company's going places. There's always that speculation, but
yeah,
you got to remember their revenue beat earnings, which is a good thing. And we know why their earnings fell below, because they spent so much in Meta. That's their investment. They're really trying to grow that platform. And I think, I'm not surprised because we know they're spending like tens of billions of dollars over the next several years.
Yeah, I have it up here. It's funny because I think Facebook was a growth company and then they matured. And I think they're actually probably going back into being a growth company with this new Meta arm. It says Q4 they had $7 billion of R&D and another 7.7 in marketing and administrative expenses. So they're spending a ton of money. But this is the stuff that they are spending money. You want it to go into R&D. So this, from an investor, I'd be okay with, especially if, the next few quarters you're seeing tangible effects of these investments.
Right. Maybe I'm so I'm like, I feel like I even tell people, don't get married to a stock. Don't like feel you have to hold on to the stock and you have to be bullish, because if signs are there. But I'm kind of married to Facebook because I bought it at the IPO and I made a lot. So I'm always like, I always think highly of them. But I still do. I'm not like, I don't think I'm missing anything. I do see some concerns. I'm a little concerned about Meta. I like the direction, but I'm a little concerned that it may not grow to like what they think it will grow to, and they're spending a ton of money. But thank God, Amazon. I'm heavily invested in Amazon and Facebook, and I have a lot invested into like index funds too. So thank God that went up. Yes.
Yeah, and I saw that they're increasing their prime prices, so that's another few $1 billion every year that they're generating at the blink of an eye. So Amazon, no concerns with you. That's not going anywhere anytime soon. Same with Google. Like Google is absolutely like 41% revenue growth year over year. Just mad.
Yeah.
Any favorite sectors? Yeah, my favorite sector right now is energy because it's hot. Energy is hot right now.
Energy. We talk a lot about like oil and gas stocks, some like gold miners, but I know those are really popular.
Yep.
Have you noticed certain companies get more views?
Absolutely.
Yeah,
absolutely.
right.
I don't know. I posted one video on metamaterials that like blew up, and I got like all these metamaterials people coming in and they're like, more meta, and I'm like, I don't want this to be a meta channel, but so it is easy to go like post videos knowing that you'll get more views, but at the end of the day, like views aren't the only thing. I want to cover stuff that I'm interested in and that other subscribers are interested in too. But I watched one of your old streams and you said the same thing with I don't remember what stock you said.
These like 5 or 6 stocks always get a lot of views. I don't get it why. Suncor, because I do videos of very similar companies, like similar size, and I don't get nearly as many views. But Suncor gets a lot of views. Energy Transfer, Alibaba,
Yeah.
AT&T, and there's probably a couple others. But some companies get like a ton of views the first time I did it, because it's like Zomedica. The first time I did it got a lot of views because it was trending,
Mm-hmm.
and then the next 2-3 times were a lot less. But I try not to just do videos for views, but
Yeah.
it kind of helps. So
Yeah.
but yeah, Palantir I'm working on Palantir, but I took a 2-day break. This is like the first time in like 18 months I didn't work on a video. So I took a 2-day break, but I did put the Excel spreadsheet together, and I lost like 30% or so from Palantir.
Mm-hmm.
I cut my losses and I bought Netflix.
Yeah, Palantir is a very polarizing stock. Their product is super, super cool. You love contracts with the government, but for them, the dilution has just been killer. You're fighting dilution here. So I did not like it at $20. I like it closer to 12, $13 a share. But
I got in my model.
yeah, 12 to 13 bucks a share.
It's not going to be well. That's where they're trading it now, and I'm sure people are not going to like it. But I got it at $7.17.
That's even better, honestly. Yeah.
How does Palantir compare to NSO with the Pegasus product? Like a company like Palantir, it's just so like abstract. Like I kind of get what they're doing, but I can't really verbalize it too well. Like we all know what Tesla does. We all know what Amazon does. But like if I don't even know how, like they try to do like big data mining, which that's another buzzword that doesn't even mean much. So they one thing what's interesting with Palantir is they were able to identify like soldiers, right? They help soldiers. I forgot what. Do you know what I'm talking about? What do they do with soldiers? They help them. Does anybody know with Palantir? Like they work with a lot of like military and soldiers to figure out to identify their enemies, or Gotham uses anti-terror analysts. But these are all such high level phrases. Like you can't it's not tangible. Like if I say what Tesla does, they make cars, and we all know what that is because we drive cars, most of us. They manufacture cars. Like what they do, I don't know. It's just hard to get your head wrapped around it. So the only reason I invested in it was because of Peter Thiel. He was the biggest investor, so I figured if he's involved, they're probably. But he's probably involved in like hundreds of companies.
Yeah.
So just because he's involved doesn't mean it's going to be successful.
Yeah, I think the problem with Palantir too is not a problem, but when Cathie Wood entered, you had a ton of retailers following into the stock. So probably saw a little bit of hype, especially during the SPAC craze of last year. So I think they're netting like $100 million loss right now. So definitely an early stage company. At one point, you might be glad if you can get in at $12 a share, but it just, do you believe in what they're doing? And I think to believe in what they're doing, you have to have an understanding of what it is that they're doing. So like you said, it is a little bit of a nuance, and it can be difficult to understand.
And for years, it was so much more of a black box. Now that they're public and it's a little easy to get information, but still, if you ever listen to this guy, he's a smart guy. The CEO. I mean, he has to be smart. I think he went to MIT, or he's a PhD in physics.
Mm-hmm.
I don't know. It's just hard to really grasp what he's saying. So that's why that's why I hate looking at banks. I could do it. I could do any company, but I like to at least talk about things I understand. And if I'm gonna put up these numbers, if I don't understand a lot of things, especially with the bank or insurance company, it's really hard to understand with all the derivatives and the swaps and all those underlying things. It gets a little complex.
Absolutely.
But so what's does anybody have a questions for me or Kate? You can throw them out. So what are some popular videos you do on your channel?
I mentioned Meta earlier. SoFi has been a pretty big one as well. I did a bunch of Bitcoin mining companies because big into Bitcoin as well. Those usually do pretty well. That I think I posted 1 or 2 Alibaba videos. Those both did quite well.
Yeah, Alibaba.
But I'm trying to think. If there's a few where it's like if I post this, I know that people are going to click on it when they see it. So definitely do have those in rotation. But it's fun to look at new companies. Like I don't want to keep doing the same company because then you kind of get people that only want to see one company, and then it becomes like a super niche channel. Where I think the big thing with this is that I'm sure you can attest to this is if it's not fun for you, it's going to become a lot harder to do because it's already a good amount of work. But if it's becoming something that you're dreading, or you looked at the stock yesterday, you're looking at it again, it's not going to be fun for you. So for my stamina, I gotta switch it up and make sure I'm looking at new companies, for sure.
Right. REITs are popular. They seem to get a lot of views. It seems like most dividend stocks actually get a lot of views.
I would say that because you said AT&T and Sunrun as well. I was like, dividends. Oh wait, there's a ton of questions. That's funny. We've been asking hella questions. Yeah.
But I'm trying to look for it's more like comments. Do you care about corporate governance score? I'm not sure. Corporate governance score. You mean the ethics of the directors? Is that what corporate governance score is? I don't know. I mean, I don't really. What's that?
I was gonna say I know some investors do target CSR, corporate social responsibility companies, from just like a morale standpoint. Some people probably don't think twice about it. I personally, it's a plus, but it's not something that I actively look for.
Right. The thing is, a lot of people try to if you watch other YouTube channels, they try to focus on something tangible, so you could kind of hang your hat on something, and like shares outstanding is a good one. They say if your shares outstanding go up, that's a bad thing. So they can give you something hard to look at, because the stuff I say is it's so hard to I say, well, this is good, but not in these 3 situations. And if this happens, and then it gets so convoluted, because there's really no way to there's no hard way to look at things. People try to do that, and they go, I only invest in PEs below 20, or I only invest in PEs above 20. Mm-hmm. It's just so many things you have to look at to get the whole picture.
Yeah.
Actively look for any thoughts on inelastic market hypothesis. The idea is that lots of shares are held by passive investors, leaving less float, making inelastic.
That's interesting.
I'm familiar with inelastic, but I didn't think about the shares. I think of oil companies as inelastic, because we need oil. But yeah, when it's a low float, it gives it makes it easier for people to apply a short squeeze, because there's less shares to force the price up. There's less shares to hold because other shares are all locked up. if anybody watched my S&P 500 video, one of the rules to be part of the S&P 500 is you have to have at least 10% of your shares on float. Because which I thought was low, but oh yeah, and everybody watch this video. My goal is to get this video to 100,000 views. My most is 20,000.
Which one is that?
My most?
No, which one?
This video. Hey, Jay Mula. This is my first sub, guys. Jay Mula. For the first 3 months, he was only one really commenting.
That's nice.
Yeah, it keeps you going. It's in the beginning. If you don't get like much views or comments, or if you don't get comments, it makes you feel like, what's the point? No one's watching it.
Yeah.
Thoughts on CLF. Yeah, so everybody try to watch this video, even if you don't. It's connecting the financial statements, and I really feel that video is really valuable. Like if people kind of understand how the financials work, because once you get a high level understanding of anything, then when you try to dig into it a little bit, it starts to make sense to smaller topics. Like if I was gonna like say, which I learned not that long ago, which I was surprised. An asset impairment, like a company doesn't get a tax benefit when there's an asset impairment. You know what, like. And so if you don't have like a solid understanding of like at least a high level, you have no idea what I'm talking about. So a lot of people probably like, what does that even mean? Do you know what I'm talking about, Kate?
In terms of understanding the financials?
No, like so if there's an asset impairment on a spreadsheet on the income statement.
Oh yeah, it's funny, we hear, I think there's been a lot of confusion with this with like Bitcoin asset impairments as well. So it's a line item that I think has come to light most recently because of the asset impairment. But to your point, I don't think it's really been a big topic of conversation prior to, when people were, having asset impairments of hundreds of thousands of dollars due to their Bitcoin losses on their balance sheet. We saw Tesla did it, and then Microvision, I saw that they just actually got rejected from how they classified their asset impairment. So something to consider. But
yeah, it's called an impairment, right? Because they have to mark to market their Bitcoin every quarter, I guess every income statement.
Mm-hmm.
I talk about this in the video with what's it called? BBC? No, what was that company? Remember I had a video, a live stream with the CEO of Bitcoin mining company.
Oh, there's a ton of them.
Ben, what was that company? They just came out with the dividend, a Bitcoin dividend. They call it a dividend.
Let's see.
BTCS, right? BTCS.
Oh yeah, BTCS.
Yeah, BTCS. So, and I talked about this in the video, which I'm sure. Hey, from Italy, what's up? What I thought was interesting, and it works the same way with land. The balance sheet only reports Bitcoin. Same way they report land is at original purchase price. So if you bought $1 billion of Bitcoin or $1 billion of land, it could have been any year. It could have been 2005. if it's 100 billion, if the land or the Bitcoin was worth 100 billion, and you look at the 2021 balance sheet, it still says 1 billion. It only has it at original value. Because same thing with land too. So if you were looking at a company like maybe McDonald's that owns a lot of land, and if they bought a lot of land in like the 70s, 80s, it might be worth 10 times what the balance sheet says. So these are good things to know, because not every, even sometimes, even at investment banks, they might not even look into this detail for every company.
Yeah, it's interesting how they classify. I'm curious it'll stay like this because it still is kind of early in the space. But
yeah, he was talking about that they might change it, or he says they should change it.
Yeah,
and every single quarter, especially with Bitcoin, could you imagine if you have Bitcoin on your balance sheet? If one quarter the Bitcoin goes from 1 billion to 2 billion, you have to report $1 billion gain on your income statement.
Mm-hmm.
It's not, you don't get any money. You're still holding the Bitcoin. And then next quarter goes back down to 1 billion. You report a $1 billion loss on your income statement.
That's what Tesla happened when they bought it in Q1, and people were like, it's because of their Bitcoin, like chill out. And then, when it went down in Q2 and Q3, loss.
And this is why some people, and this happens all the time in this channel, people say, oh, but they had a profit this quarter. Their net income was positive. I go, yeah, their income was positive because they had this, they sold one of their divisions, or they sold part of the business, or they passed through this unrealized gain on the income statement. They still lost cash. So hopefully you guys pick this up, because I talk about this. I try to talk about this stuff while I'm doing the videos. But yeah, watch that video and try to share it. Watch it every day for the rest of your life, over and over. Try to get it to 100,000. Because I really think if this video could at least get some traction in YouTube land, I think I'll get a lot more subs. But let's do another raffle. We usually do 2. Chuck Clift. God. So you're working now with the channel, or you're working right currently, or are you just doing a channel?
Yep, I work full time from home, so it's a grind. But yeah, it's definitely a lot easier working from home doing this. But
I remember my first live stream. It was just me and Jay Mula. It wasn't a good stream. It was real. I was using YouTube's like streaming thing. Which wasn't too user friendly.
Yeah, it's funny. I think the first one I probably had like 5. Couldn't figure it out. My face was not in it at all. But like to your point where, just having one person saying like you're doing awesome, even if you're the only person seeing anything that I'm posting, it does give you a little motivation. I've had people in my Twitter DMs that are like, you'll get there, keep going, you're awesome. So it might seem like a small gesture to them, but it does help. So it helps, especially when you have the occasional troll, some wise guy in the comments.
I have to get to my live stream 1080p. I'm not even sure. I know what you mean by 1080p, but let me check when I set it up. I've never even seen the option, and I didn't even know. I always thought, because when I watch a YouTube video, I could change it. I could change it to like whatever the options are, like 180, 360, 720. So 1080p is always the best. I thought it was on your side. Okay. But thanks for letting me know. Okay, so I'll change it. Every time I click here, the randomizer changes. 15 just in time. 22 Z Raker. If your name's not on here, let me know. 3 M Taylor. Are you guys aware of Meet Kevin? Yeah.
Yeah, he sold
Pretty
all the
big.
stocks.
Is that right?
Somebody posted that in my Discord, where he posted in his Discord that he was selling all the stocks in an attempt to time the top of the market. And he even said, he was like, this might be the stupidest idea ever. More people lose money trying to time the market than just staying invested. And oh yeah, so he did buy in. I think he was going to try to buy in strategically after a little dip, which 2 weeks ago was a pretty rough week. Was it the last week of January, I think, was just a slaughterhouse. So it does seem like he probably did pretty well if he already bought back in, because last week was pretty good.
Does he show you how much he has in his portfolio?
It's several millions of dollars. I think he does. I don't watch all his videos. I'll watch some of them if it's something that I'm interested in. But I think he does do transparent videos. He sold at a very bad time. Yeah, I don't know if he was already down. I don't know what he was holding. Yeah, 20 million.
20 million?
Jeez. Yeah, he's a big
He does
player.
make a lot of money. Dutch,
you won the
You won the raffle, Dutch. Make sure you email me and.
Oh, it was 30 million and it was down to 20 million. I didn't know that. Good.
The guy I had on 2 weeks ago, Roman from his name, King Finance or something. He turned like 100,000 into 2 million. He showed us too, but when he showed us, it came back down to like I think 300,000. But he did show us to hit 2 million at one point.
Wow.
He screwed up the raffle. 4 got picked twice.
Matthew's playing no games.
No, every time I make a change in a screen, like especially mainly when I input someone's name, it's going to change the number every time, but it doesn't count. The only time it counts is when I'm in this gray box, and then I manually change it. I'm always going to be changing things in this sheet, and every time there's any type of change at all, change that number. So it's only when I'm in that box. But you did win last week, Matthew, right? Why do you say he's the worst? Why does so many people not like him?
I'm not familiar with him.
Because he pumps like penny stocks? Is that why?
Oh, is he a pumper?
I mean, I don't know. I mean, that's the only thing. I mean, I don't know if he pumps it. He talks about stocks he owns. But and I don't. He likes penny stocks. I think it's crazy, but he didn't sell, unfortunately, but he did grow, which is amazing, because I hear people talk about stuff like this, but I never see any proof. He actually showed us.
Yeah, it's cool when that happens.
I said that because I'm 4. What was the Russian dude from Brooklyn? No, I thought he's somewhere weird, like not weird, like Minnesota or something, like not a commonplace. I shouldn't say weird. Thanks a lot, Sean. Appreciate it. Kevin is a big pumper. He's entertaining. I guess.
It was
You don't learn.
interesting because he went from like full on real estate to like stocks during the pandemic. Like I don't think he was big into stocks until, you know, the pandemic. But I will say with him is that you can hate on him, but he is very good. I could tell at picking things up very, very quickly because even throughout his whole political campaign, the fact that he could sit in front of a camera and just talk directly to you, not have to edit, like he's very intelligent. And I don't think that is,
Yeah.
um,
No, I mean, I wish I could do what he did. And I'm
yeah,
saying when I watch him, I'm not like learning that much about the market, but he's
yeah,
really he draws you in, you know,
yeah. He's very charismatic.
which is how you're successful on YouTube. But if you're looking
Mhm.
like people who watch my channel generally wouldn't watch his because people watch his aren't usually don't invest that much in the market or aren't or just it's more entertainment, kind of something to put on and you can kind of lay back and watch. My
Yeah,
channel, you
it's
can't just
chill.
have in the
Yeah,
background and be like, oh, this is while you're on your exercise bike.
yeah,
Unless you're really into the stock, then
yeah.
but it's like my voice and my personality, it's just not it's not dynamic,
Mhm.
unfortunately. Like,
That's okay.
you do like that. That's good to know. I mean, I only saw one or two videos, so maybe he's not as bad. I just saw the stuff I watched, I was like, he has like 1 million views in 2 days. I'm like,
Yeah.
I'm so jealous.
I don't know how people. There's no way everyone that follows him can watch every single video. I think he pumps out like 4 a day, but there are a few where I'm like, oh, I want to hear about this anyways. Let me hear what he has to say. And he usually is just very direct and to the point. So I won't watch all of his videos. Like there are some YouTubers who I'll watch every single video that they put out, but him, it's more like I don't even think I'm subscribed to him actually. But he's very intelligent.
Yeah.
Even if he says some things that people are like, hmm?
But it's like Kramer too. I mean, you can rip apart a lot of things people say, but like you there's no way, even stuff I say, there's no way you're going to be right all the time. And
Mm-hmm.
and it is kind of entertainment. Like he is like he is good at that. And that's how you're successful in here.
Yep. You don't get to where he is not being good at what you do. So he definitely is one of the best on here.
Yeah. I mean, I'm jealous. I mean, I don't really, I don't despise him or anything, but I'm definitely jealous whenever I see, well, anybody who gets more views. I'm always like, oh, how do they get so many views?
He grinds, that's for sure.
But yeah,
But he is the news.
you got to change your hair color.
He did dye his hair bright green. Maybe if you want to try something new.
Yeah, I don't really have much hair.
Yeah, everyone has their what they're good at. I don't think Kevin is going to be breaking down, you know, a DCF anytime soon.
But he's a young guy, and just it's easier for him to relate to people under 21. Where me, I can't imagine that many people under 21, unless they're really into like stocks, like I was when I was young.
Well, it's interesting too because I think, you know, people my age and younger, they don't care about what the book value of the company is. Like, let's be real. They want to know what YouTuber is saying, price target 300x, you know? So
Right.
they're into, you know, where can this go? I don't care what the company's valued. I don't care how many assets they have. Don't care. Where's it going to go? That's kind of the crowd that he probably feeds into more, where you're like, hey, this is what the company is valued, you know, based on ZCF. So you're going to get a totally different beast of people.
So exactly. And it's definitely not sexy investing what we do. I'm like, just give it 20, 30 years. I mean, it's not like who's going to like, and you guys understand because, but, and you know, anybody get lucky winning the lotto. And I try to do it. Like every time I try to invest in a penny stock and I I've never made any money. I was like, I just really want to hit like, I wish I invested in AMC. I wish I, but yeah, I never made money from trying to. I still do it every now and then. I did it with that stock waiter. I put a lot into it, and it went down like 50%.
Yeah, those they say with those is you'll invest in 100 and you'll have one that pays off, but the one that pays off pays off. So it's like almost a volume thing. You can play one, but chances of you getting that one are probably not as high. So it is tough. I think I had success with one, the most random one. It was ticker ENG. I couldn't tell you how I came across it, but I think it was like
ENG.
it was less than $1 at the time, and I rode it all the way up to. Actually, no, I think it was less than $2. I want to say it was like one. What was it? It was about a year ago.
This is a really crazy stock movement.
Yeah, it
So
was.
you got it over here, I guess.
I think I first got in December. Yeah, and I rode it all the way up. I didn't quite sell it at $9.40, which is I think where it landed, but I think I sold it at probably 7 or 8. And I was playing options on it. So it was fun, but like again, like that type of movement in penny stock is just very
if you could time it.
Yeah, just luck. It was purely luck.
You can time it. The thing is, if you did say try to time it over here, you might have to wait several years, like in 2018, 2019, 2-3 years. And then it jumps up here, but then you'd have to sell it. The thing is, yeah, you I don't know, you played options. That's pretty. But the problem is most people won't sell. Like if you bought it down here, say you invested 10,000, say at $1, and then it went up to 5. A lot of people say, "Wow, I would definitely probably sell," but the thing is, you always want to like hold out, and then when it gets to a point, like okay, I should sell at 7. I shouldn't wait. And then if it goes down to 6, you're like, well, I can't sell at 6 because it was 7.
Yeah.
And then when it goes down to 5, you're like, well, there's no way I'm going to sell 5 again because it was just 7. I'm sure it'll get back up to 7. Yep. And then it goes back down.
Yeah, the advice that I could give for this is actually super interesting, and it's actually exactly what I did when I played options. I had multiple contracts, so you can't do it if you're buying like one share, one contract. But for trading, what you should do is once you're up a considerable amount, say you've covered your cost base. Let's say it was $1,000 and you're up $1,000. Great, sell off however many contracts you can to recover that cost basis. So now you're net zero. Anything else is just the cherry on top. So every time, say you're up 10%, tier sell off your position so you can lock in some games. Don't get greedy. You can always calculate, oh man, if I sold the exact top, I would have made this amount of money, but it's incredibly unrealistic and you're probably going to lose more money doing that. So understanding, tiered selling is just the way to go.
Yeah. I always, what Devin says is exactly how I think. I don't want to sell a stock before a year because you pay so much in taxes.
Yep. That'll get you.
The only alternative is to do covered calls to kind of protect your downside.
Yeah.
But it limits your upside. And I did a covered call on Facebook, I remember, to protect, and then it blew way past and I lost a lot of money. I was like, all the covered calls I made over the years, like made 500 here, 800 here. I probably lost it all on that Facebook trade. Like I didn't actually lose money, but like it was the opportunity cost. I could have made that money, but I had somebody took my shares away once it hit.
That's always a risk. Yeah.
But yeah, so that's a way to get around it, is to sell covered calls if you don't want to sell the stock, because but I mean, and the thing is too, people like if you are able to identify a really good stock like Amazon or Microsoft early on, it's just hard to hold it for 20 years and realize all those gains. If you did what Kate said, which makes sense, you keep cutting. You're probably still going to be super wealthy if you were able to still hold for 20 years and just selling off 10% at a time. But you wouldn't realize those massive gains because people they see a 50% profit and they take it. They don't want to risk it going down.
Yeah, no harm in taking profit. You don't want to sell covered calls when your stock is at a 52-week low. That's true. I think the best time to sell a covered call is when the stock is up massively, and it'll probably retrace against the trend next day.
Hey, Asman. No, what you don't want to sell covered calls when your stock is at a 52-week low, though.
Your premium's just going to get less. Yeah, be less.
You get little premium. Yeah, because like with this stock waiter I bought, I timed it right because it went up a lot the following week, but I don't want to sell, and it's a SPAC, so if you're a SPAC, you kind of have to go to $1 at some point. It's a SPAC rule. Can anybody name a SPAC that's above $10? There's not that many.
ChargePoint. Well, what's ChargePoint these days? Actually, it's probably pretty close.
There's so many SPACs that just crash.
Yeah.
DWAC, yeah. That's Trump's company, right?
Yeah, this one's been doing well lately. I think there's some news coming up.
That's a really good. Oh, but you could have only made money, and none of us could have got it down here at $10, unless we bought it before. Unless we bought it before they even mentioned the acquisition, which would be kind of risky, but
yeah.
So nobody could have gotten it once they mentioned that they had an acquisition target, because all the insiders buy.
Yeah.
That's why if you ever see IPO for like $25, you're never going to get it that price, and it runs up to like $70 the first day.
Yeah.
You can't get it unless you work at like a big bank.
Well, some of these brokerages let you get in pre-IPO. I don't trade on Webull, but I know that you can get in at the IPO price for some of them. Yeah, I'm going to see.
It's hard to.
Yeah, so there's an IPO section, and it has upcoming, and it'll tell you what the offering price is and how many shares are being offered there. So I've never tried to get into any of these. I don't know how hard it is, but I know that is an option now.
Okay. Thanks a lot, Asman. Yeah, the S&P video, I was a little concerned. I'm like, are people going to like this? It takes so long to... Any video I do that's non-DCF, it takes like the whole day. Working all, like, especially the connecting part 4, connecting the financial statements. That took forever. And like it gets like 500 views, which is... And if a regular DCF video usually averages like 1,000, so it's like it almost seems worth. Like, why am I wasting my time on? But yeah, thanks for watching the S&P video and commenting. I did a video recently about the S&P 500, just about like the history and like. It's interesting when you learn about it. Like, there's actually 505 tickers in S&P 500, because 5 companies, you might know this already, but 5 companies have 2 classes, like Google, GOOG and GOGL. They're both in S&P 500. There's 500 companies, but 5 companies have 2 classes in the S&P 500. And a lot of companies, like I think it was like 38, have been in the S&P 500 index since it started in like 1957 or whatever it was. Which is actually, I think I have. These are my notes. Yeah, 57.
Cool.
It's just interesting. It's Boston beer is crushed. Yeah, I've heard. Yeah, I've looked into that. I didn't do a video on that, Sam, but yeah, that's crazy.
Wow.
Sheesh.
It's pretty flat for a while.
It's hard to really look at this with, what is that, 27 years of data. But it's actually a lot of movements here.
Oh, really?
Like this 8 and this is 50, but you can't tell because it goes up to 1,000.
What is the begin date on that chart?
95.
Oh.
So you can't really tell.
Yeah.
Unless you did this, and you can't even get.
Yeah, it's a mess.
But that's crazy. That's a lot of, wow. It went. That's pretty high, 350 for the stock, and then it went well over 1,000. But this shouldn't surprise you if you like watch my videos and understand the market. We all know this is gonna happen. I mean, I don't know the dates it's gonna happen, but like Zoom, it's all back to pre-IPO, pre-COVID levels. Most of these stocks. Peloton's well below pre-COVID levels. This was the greatest company in the world. This is gonna like 10,000 a share. What you ever notice when a stock's going up, you like it could only go it keeps going up. There's no top. And when it goes down, it's like it seems like it's always going down.
Yeah, I posted something when it was 112 saying it was bearish, and I got so much hate. Feel like you're an idiot. I'm like, oh.
Bearish on what stock?
On Peloton when it was 112-ish, and people were like, all right, have fun losing.
You can't just disagree. If you go against what someone says, and you're a moron. It's not. Yes. It's kind of like maybe it's the fundamentals of the company. Maybe it's, or maybe I'm not a moron, but they have no. Some people actually have good feedback sometimes, but a lot of people are ignorant.
But yeah, I can take that.
We all knew this. I knew Peloton was garbage. I mean, not garbage, but I mean, it's definitely not a great company. It's just they sell a bike, and it's a good bike, but it's been going up, right? It's been up like 30-40% the past.
Yeah, there was rumors that Amazon was gonna buy them, which I think that'd be good because I think as a standalone company, I think they do what they do, but I think they'd be even better under a company that has that just being an arm of their business. So I wouldn't hate the Amazon acquisition. Amazon has a similar bike that they give off that's kind of like a knockoff of a Peloton. So that could be a good deal for both sides.
Yeah, there was. I can't even tell on this chart, but it's been coming up. Maybe I need to look at 1 month. It was up like after hours on Friday, right? I was wondering why Peloton went up after hours.
It's because of the news. Yeah, because of the acquisition. But the thing with Peloton that I will say is that any company that has any sort of residual income in terms of like subscription service is a check mark in my book, because I think, like you mentioned with DCF, it's all about how much money they're going to make and trying to forecast revenues. But in terms of subscription revenue, you have a pretty good idea of what you're going to make if it's subscription based. So it just adds an element of certainty to future cash flows, which I appreciate.
Yeah, that's the value of Peloton, is the monthly subscribers.
Mm-hmm.
But it's just a product that you don't want to subscribe to, because so many people don't use their bike after like a few months.
Yeah, I've never had it. They have other stuff. I know that they have classes. You can just get like an app where they'll take you through workouts and stuff. But I know people that do it, love it, and it's like the instructors apparently are very, very good. So
okay, maybe it's better than I thought, but there's pretty much one reason. I mean, besides the fact that they're a great company, Berkshire Hathaway, why the stock price is this high. I mean, does anybody know why it's so high? Because lots of other stocks could be even higher. Apple could be higher than 475,000 a share, but it's not.
have they ever done a stock split? Like ever?
Yeah, that's why. But that's the only reason they never did a stock split. And he, on purpose, he's never split, because he wanted to keep it kind of like
institutional.
like only people who really appreciate his stock. I don't know if he wanted to shut people away, maybe, but I think it's just he wanted people to really appreciate the stock. So once it got, but now it doesn't matter. Not only they have the B shares, and you could even if they didn't have B shares, you can buy partial shares anyway. But he said it. I thought it was interesting, because someone asked, like, because initially when they came out with B shares, he was concerned that the quality of people coming to the convention would not be as high. Like, he would be concerned it would kind of dilute the convention. But he said it's just as the same as before. The people are knowledgeable, and it really hasn't changed anything.
Yeah.
Apple split once in 1990s. Amazon only split once. That's hard.
Amazon might do one soon. I'm curious if they'll follow suit.
Their stock's getting high.
Yeah.
I own a good amount of Amazon. So they split 3 times, 2 for 1, 3 for 1, 2 for 1. They're probably going to do like a 10 for 1.
Yeah, it's getting up there.
It's a good way for options, because it's hard to get options. Unless you're dropping $300,000.
I mean, you could do like spreads and stuff. That's typically what people will do. They'll do like a debit spread, so you're selling and buying the same option, so it's a net debit, but it's not crazy. But I agree. I think same with Google. I think once Google is trading at 140 a share, you're going to see an absolute frenzy of people just trading, because the only people trading options on these are Nancy Pelosi, who's buying deep in the money options.
Yeah, that's true. I mean, you could buy way out of the money options, and it's not too expensive with Amazon.
Yeah.
But it's also psychology. But this is just my own thought. Maybe I heard it from someone else, but people rather have 10 shares at $100 each than 1 share at 1,000. Even though they know it's the same, it just makes them feel better.
Yeah.
That they have 10 shares.
I agree. I saw a comment about Penn. You made a video about Penn. Are you a fan? I like Penn, and it's always interesting to compare Penn gaming to DraftKings. Scott, do you know Penn?
Yeah, I did a long time ago. I did a video on Penn.
Yeah, so DraftKings is spending like $500 million every quarter on marketing, and they're so far into the hole right now that I think that they're trying to just be the online sports betting company. But Penn, I'd argue, is they're spending way less on marketing. They're profitable. And you have Dave Portnoy, who is basically free marketing, because he has millions of followers across several social media platforms. They're already in several states. And from what I understand is that they're doing very well. The people that are using them love it. It's great. There's a ton of like social interaction online with, the Barstool Sportsbook. So um, I like it better. I don't think it's as much setting cash on fire as DraftKings is, who also did some dilution last year as well. Um, but it's interesting because once they got added to the S&P, massive run up and then absolute tank. I got into Penn, I think at $12 a share,
That's
because I
another
was like,
SPAC.
Dave Portnoy is more of less like a public figure. Like maybe not the best businessman, stock trader. I wouldn't say that at all. But um, sports betting it's still pretty early. I think only like 30 states maybe have legalized it. So I think they'll be a major player, and I like that they're not setting cash on fire.
It's like these three industries, gambling, cannabis, and tobacco. Some of these companies make a ton of money, but their stock price just doesn't go up as much as if you were doing something else, almost anything else, like tech or selling furniture or anything. Because just a lot of people just don't want to buy it. That's the only reason I don't like buying these stocks.
Well, DraftKings is like, that's a problem when you're spending that much money. You got to raise money somehow, and it's either debt or equity financing, and they've just diluted the heck out of their shares. So, yeah, they can bring in more money, and the underlying value of the company can increase. But when you're, releasing hundreds and hundreds and hundreds of shares into the market every quarter, you're as an investor, you're fighting dilution. So
Right.
that's always something to keep in mind.
Yeah. Yeah, dilution is big, or a lot of debt. But yeah, but that's just the name of the game. It's just about selling stock. They just constantly sell stock.
Yep.
These companies to stay in business. Low beta stocks. Low beta. You should invest in like gold or oil and gas. They usually have low betas. BTI. Do you ever follow? Do you ever do videos on British Tobacco and Philip Morris?
I don't think I've done any tobacco. I think I did a floral growth company, but other than that, I typically don't do those types of videos. I don't know what YouTube's policy is on those types of videos. I know that people were saying that they own tobacco channels and they were like getting demonetized because it just wasn't. So I was like, I don't know.
Okay, I've done those. I haven't had a problem with it.
Okay, that's good to know.
I think companies like Coca-Cola, I don't think it's dilution. I think it's these they're just so big, these companies, like AT&T too. Once you get to a certain size, I think Kate got kicked off. It's just hard to move. It's hard to grow. Even if you bring in like $1 billion more revenue, it's just percentage-wise, it's just hard to grow. He was saying about does dilution explain Coca-Cola's slow growth?
Yeah, no, Coca-Cola is actually anti-dilutive, where they're actually buying back shares.
Yeah.
So I think that they're just, a mature growth company, or value company. So at that point, I don't think you're going to see that much growth. But with Coca-Cola, what's so interesting with them is that they sell so many products that if they even increase the price of their products by 1 cent, like the amount of revenue that they can generate by that 1 cent increase is absolutely absurd.
Right.
So cash flow is king, and Coca-Cola is a good one to have for sure.
Yeah, I was saying the main reason is these companies they're so big, and it's hard to move a lot. Even if you add a few billion of revenue, you're never gonna like double. You it's such a big base already.
Mm-hmm.
Percentage wise, it's just so hard to grow at the pace of like a startup company would.
Yeah.
Although some of these tech companies grow a lot, so maybe.
Yeah, I mean, Google 42% revenue growth in a year. So
maybe I don't know what I'm talking about.
No, that was abnormal to say the least.
But it is a lot easier to grow and scale if you have like a product that you can infinitely produce. Like most tech companies have products like that where they can infinitely produce as many as they want with not that much. It's very expensive and time consuming to double the number of cars you made or double the number of any type of manufacturing company. Pretty much, it's expensive. It takes time. You have to build out factories. So you can't like grow unless you have, you really plan it to have a ton of cash sitting around. But Apple keeps rabbits. But yeah, so I think this was a good stream, everybody. And when you left, everybody's like,
yeah, sorry, I accidentally X'd out of the tab looking for my shares outstanding history.
Yeah. But yeah, everybody go to Kate's channel. I'm sure you will now, because I think everybody seemed to like you better than me. That's fine.
Oh my God. They're here because of you.
How long? How do I come up with my DCF? I think it's pretty transparent now. How I calculate it. I used to be a lot less transparent, but now it's pretty. You can do it yourself. The only thing you need to know how to do is, I guess I could tell you how to do this, but you need to just know how to discount the discount formula.
You can get a template online too.
Yeah, you could. Oh, you could even Google it. How present value numbers. Yeah. You just have to present value. And I don't even calculate the WACC anymore. I used to calculate the WACC. So I show you where to pull it. But okay. So Kate, does a great job. Love her channel. Okay, Kate, thanks a lot. And I'll see you around. I'll probably say hi in the live stream. I saw your live stream before. I didn't say anything. I just went on for once.
Just watch it.
See what you did. The spirits, but I didn't say anything. Next time I'll say hi. But yeah, thanks a lot. You had a lot of great insight.
Yeah, no, thanks for having me. It's nice to have a conversation with somebody that's not myself.
Exactly right.
All right. Well, keep up the good work. Your content's super, super awesome. So keep on.
See you, everybody.
Bye.
Good night.